The Philippine stock market continued to absorb inflationary pressures in April, which kept the main index below 6,100 points for the rest of the month. The inflationary pressures the stock market absorbed in April was from the fallout of the Middle East conflict, which forced the Bangko Sentral ng Pilipinas or BSP to take a more hawkish stance in policy rate setting, among others. However, the Philippine Stock Exchange Index or PSEi still performed better in April compared to March. At the end of April, the main index lost only 2.75%, opening at 5,998.68 points on the first day of the month, and closing at 5,833.64 on April 30th. On the other hand, the PSEi lost 7.43% in March, opening at 6,426.83 and closing at 5,948.94 on March 31st. The highest close of the PSEi was on April 10th at 6,098.21 and the lowest close was on April 30th, the last trading day of the month, at 5,833.64. Meanwhile, the highest close of the PSEi in March was on the 3rd, or 6,445.38, while the lowest close was on the 30th, or 5,869.49. Among the most anticipated announcements the market usually awaits is the monthly inflation rate, which usually has a major impact on investor sentiment. But investors took the news of a higher 4.1% inflation rate for March without much panic, as this was expected due to effects of the Middle East conflict. The inflation rate for February was 2.4%. Even after the March inflation was announced on April 7th, the main index closed at over 6,000 points for 6 straight trading days from April 8th to 16th. The announcement of a 2-week ceasefire between the United States and Iran on April 8 also saw the PSEi climbing by 2.22% to 6,089.91 points. The Philippine peso also strengthened to the 59 peso level against the US dollar, and global crude oil prices settled at below $100 per barrel. This is what Philstocks Financial Incorporated said in a market report on the PSEi remaining quite resilient. The local market surged as the US-Iran 2-week ceasefire fueled investors' optimism. The market also did not panic after the BSP increased benchmark rates by 25 basis points to 4.5% on April 23. Somehow, investors already expected the BSP to take a hawkish stance on rate setting. The BSP raised the policy rate citing worsening inflation pressure from the Middle East conflict. This is what BSP Governor Eli Remolona said about the need to increase the policy rate. The reason is clear. Inflation outlook has deteriorated amid the ongoing conflict in the Middle East. Higher oil and fertilizer prices are expected to spill over to food prices and services. However, what investors were not prepared for is the Philippine peso breaching the 61 pesos to a US dollar level. And on April 28, the peso closed at a new record low of 61.30 pesos to a US dollar, which caused the PSEi to drop to 5,866.79 points. Prior to the close of April 28, the last time the main index closed at below 5,900 points was on March 30. This is what Luis Limlingen of Regina Capital Development Corporation head of sales said about market sentiment after the peso dropped to a new record low. The Philippine market ended lower as selling pressure continues to weigh on equities, driven by continued peso depreciation to a fresh record above the 61 level against the US dollar. For the month of May, investors will be awaiting the release of the April inflation figure, which the BSP sees settling from 5.6% to 6.4% due to the fallout from the Middle East conflict. Equally critical is the announcement of the first quarter gross domestic product or GDP growth, which is expected to be at the lower range or below 4% due to the effects of the Middle East conflict. To recall, the Philippines recorded a GDP growth of 3.9% in the third quarter of 2025 and 3% in the fourth quarter, as the flood control scandal affected market and business sentiment. The market will also be closely monitoring the performance of the Philippine peso against the US dollar, hoping that the BSP will intervene to prevent the peso's further slide. A strengthening dollar is bad news for the peso, especially if the US Federal Reserve takes a hawkish stance towards policy rates, which makes the US dollar a safer haven for investors. The bad news is the US Fed held policy rates in its latest rate-setting meeting, citing worries from the Middle East war. This is what the US Fed said after its latest rate-setting meeting. Developments in the Middle East are contributing to a high level of uncertainty about the economic outlook.